First of all, hello and welcome to the show, Amit.
Yeah, hi. Thanks for having me on the show.
Yeah, so my first question to you is on the first, about the last couple of days, we are seeing some strong moves in the defense companies. Now, a lot has to do with the markets as well. Markets have been in the recovery mode. So, while the defense stocks have seen some steep correction in the last couple of months, it could be more of a sentimental drive also that we are looking at. But want to understand from you, overall picture of the defense sector, what is your view currently over here?
Yeah, so in the sector, actually, nothing had changed. To be honest, the fundamentals remained intact. We need certain systems, and they are still very much required. However, the move that you have seen over last couple of days has more to do with, I would say, three factors. The first one is, of course, the overall market. The second one is, if you look at Germany, so they have committed to more investments in infrastructure and defense in particular, and there could be a rub-off impact on some of the companies in Indian defense ecosystem that are also in within, I mean, in the global supply chain. And the third thing is that if you look at the order inflow this year, while there have been orders here and there, but some of the big orders have remained quite elusive. And we are nearing the end of the March. It is widely expected that some of these could be ordered. And it's not something that is unprecedented. We have seen orders being placed in the last week of March. So it has to do with the combination of all these three factors.
I want to talk to you about the last point which you made about the order expectations. Now, for 2025, there are a couple of larger programs also which are there, which includes the likes of QRSF, P-75 submarines that we are looking at. I want to understand from you, which are some of the big programs that you're talking about wherein there is higher order expectations, and which are some of the beneficiaries which could benefit from these programs and these higher orders coming through?
Yeah, sure. So the only big orders I would say we have seen this year are perhaps to do with the ALF-31B engines for HAL, and the second one was 12 number Sukhoi for HAL. These are the only big orders that we have seen. In February, we saw Pinaka after a long wait being awarded to Solar Industries and Munition India. And then today itself, actually, Cabinet Committee of Security has cleared the procurement of ATAGS, that is armored howitzers. So these are some of the orders that have been placed. But talking about the big ticket items that we would expect by end of the year, so P75, you rightly mentioned, three numbers P75 that could go to Moscow. I mean, that is for sure because this is a repeat order of what they were already executing. The second big order is for GRSE. Actually, this is GRSE and LNT, and there are four players at least over there. So this is next generation corvettes worth around INR 364 billion. Then there are a couple of orders in aerospace. So we have the second batch of 97 numbers LCA Mark 1A. Now, it was mentioned in the cabinet committee reports that there are negotiations going on for this. This could be a big order. Then, of course, 156 numbers LCH Prachand. So these are certain big orders in the pipeline. Now, if a combination of one or two of these orders come, then definitely the impact it will be a positive thing for the mainstream players. However, a rub-on effect of these would be felt across the supply chain. So, for instance, in these marine orders or the aerospace orders that I'm talking about, there would be rub-on effect on BL going further down, Astra Microwave, and even companies like PTC Industries, Azad Engineering. Then clearly a second theme that is emerging is ammunition. So over there, I believe that Solar Industries stands to gain over everyone else because of the fact that they have got pretty chunky export orders this year. The order book is quite robust at the moment at upwards of 13,500 crores. So these are some of the orders that we expect as we head into FY26.
Right. So as we head into 2026, I want to understand if we just have to take these 2 years into consideration. One is 2020, how FY26 would be, and if we compare it with FY25 would be. Do you expect FY26 to be a much stronger year for the defense counterparts which are there alongside? If you can talk about what are some of the picks that you have in this space?
No, so FY25, again, one has to understand the genesis that why there were no big bang orders. It was a year that was punctuated by election, the general elections, and of course there were some critical state elections also. So FY26, you're right. I do expect that some of these orders that I mentioned would be placed. And not only FY26, we are quite gung about FY27 because one of the orders that you mentioned, QRSF, which can be a pretty big order of around 25,000 crores, that could go in FY27. Then we have six numbers, P75I, that could go into FY27. So clearly, we have a long runway ahead as far as these big orders are concerned. And of course, followed by a number of smaller orders that you keep on getting, and the increasing export footprint that some of our companies are having. So clearly, the coming 2 years look pretty good for the sector in general.
Okay, so that was quite a comprehensive answer that you gave to what could be expected for the year ahead and the order inflows for each of these companies that are there. Now, in terms of valuation, if you want to consider like the forward multiples currently, there has been some correction across the defense companies. So considering that, is this a good time to enter into this space for a new investor who is there, or should there still be a cautious approach with in terms of how the markets are faring, because the fundamentals, if we see the order book, the order inflows, they remain on a healthier trajectory. So just want to understand your viewpoint on the overall defense space.
Yeah, so it's easy to sit on sidelines. I mean, considering that where the market is and considering how some of these stocks have fared in the recent times. However, we do believe that in our overall pack that we cover, there are certain stocks like, for instance, PTC Industries, Solar Industries, Azad Engineering. These stocks might seem to be highly valued, but if you consider their future potential and the order book, I think the earnings growth actually justifies that. So in case of solar, we see a clear visibility of at least 35% EPS growth over the next 2 to 3 years. In case of Azad, we are quite hopeful that the growth would be to the extent of 30% in terms of revenue over next 10 years. So you see that kind of a runway. In case of PTC Industries, for example, recently they have commissioned a war, and they would be commissioning the complete titanium casting and metal complex by end of the year. So these are some of the very exciting names, and these names are interesting because they are not uh, glued to the domestic defense spending because they are part of global supply chains of global majors. So therefore, the predictability is higher there. So our top picks in the space are Solar Industries, PTC Industries, Azad Engineering in the same order. And if there are stocks, the areas that we would like to avoid at this stage would be shipbuilders again, because we believe that EPS growth could be constrained there.
Okay, so for shipbuilders, it's still a cautious approach that we are seeing, but solar industries, PTC industries, and Azad Engineering, the preferred picks for ICICI Securities. My final question to you is about if there are still any kind of concerns or challenges that could hinder the performance of some of these companies in the defense space, if you can talk about that as well, along with the overall outlook, if you can just summarize it in a quick take.
Yeah, sure. So there are, execution challenges that we saw through the year. For example, in case of HL, the engine is still elusive, and and we really don't know when, the engine would land. There are hopes that, FY26 would be better. HL has the requisite capacity, but there are certain things that are not in their control, unfortunately. So execution, due to dependence on the imported components, is certainly one key risk that we see. The other key risk that we see, of course, that because of the global supply chains are so distorted at the moment because of ongoing wars, that if the dependencies are, let us say, on Ukraine or on countries like Israel or even Turkey for some of the components, then you could end up having orders, but you might fail to execute them. So execution is something that remains a real challenge, I would say, at this stage. Summarizing everything, I believe that there are two themes. First of all, that investors should keep focus on. One is aerospace. The second is ammunition. Both of them have got significant potential globally as well as in India, and there are companies that can be directly tagged on these themes. That is point number one. Point number two, I think the execution is likely to pick up as we go in FY26. We would see HAL producing LCA Tejas. There is a capacity to produce 24 aircrafts. We will have to wait and see, depending on the engine deliveries, how much they can actually produce. And as far as the potential is concerned, see, the whole rearm Europe concept opens up a plethora of opportunities, as I said, for the names that are part of the global supply chain. So clearly these are very interesting times. I think the stocks have shown correction, some of them quite a bit in the recent times, and one could think of getting exposure in some of these names.
Well, thank you so much, Amit, for joining and sharing the perspective on the overall defense space and what could be expected for some of these defense companies which are there in terms of order inflows, the orders that one should be focusing on, as well as how the outlook or how the concerns are. Once again, thank you so much, Amit, for joining in.